In today's video, I'm going to talk a bit on the topic of estate planning, just give you a little bit about what the basics are, but really focus in on the new tax laws for both estate taxes and gift laws, and address some of the myths that are out there and help to debunk them. But before we do, please subscribe to my channel. I have over 30 years in this business, and I want to share with you some of the conversations that I have with my clients, some of the thoughts that they have, so that you don't step on the same types of landmines that they do. So let's start for a minute with regards to the very basics of estate planning. It doesn't really matter if you do or don't have assets or how many assets you have. You should have some estate planning documents in place to protect and preserve the lifestyle that you have, the assets that you may have in the event of either you pass away or something happens before then. Let me give you a particular scenario. It happens to be of my daughter. Now, my daughter's biggest asset is my granddaughter. And my daughter doesn't have much in the way of assets, but she needs to protect in the event of the what if something were to happen, so that either she and or my granddaughter will be protected, and she can put in place instructions while they're healthy in terms of what should happen if something were to happen. It's really important, just as basic estate planning, and I'm not an estate planning attorney and I'm not giving you advice, but just to talk about it from 30,000 feet, basic will, durable power of attorney, a healthcare proxy. Many estate planning attorneys actually talk about the fact that the durable power, which is akin to the healthcare proxy on the health side, but the durable power talks more about the financial side, that the durable power is actually a more important document than the will. Also, believe it or not, a part of overall estate planning may be your retirement accounts or your annuities and what you have for beneficiary designations. So you may want to make sure that every 2, 3, 5 years, whatever, you check on what those beneficiary designations are. Make sure the will isn't so outdated that you didn't do it, when the kids were born. Make sure it now reflects your current objectives and what's happening in your life. Now, for those with substantial assets, I do want to go over the groundwork in terms of the new, for 2022, estate tax and gift tax regulations, address a couple of myths, and I also want to share with you a unique strategy that may be a bit of a loophole that you may be able to use depending upon what your circumstances are. So I do get this question asked a lot by my clients in terms of gifting, how much they can gift to the kids or others, because you can gift to others. And from 2018 to 2021, the amount of the gift you could give from one person to another was upwards of $15,000 without having to file the federal gift tax return. Now, this does get increased when it comes to inflation, but they only do it in $1,000 increments. So that's why you haven't seen anything happen over the past 3 years or so. But for 2022, they did raise that $15,000 up to $16,000. So if you are married and you have a child, between the two of you, you could gift to that child $32,000 without having to file the return. One of the myths that I hear is that people think they can only gift to their kids or to their grandkids. But the reality is, it doesn't have to be just a family member. You could do it for anyone, and neither they nor you would have to file a report. Now, if you do gift more than the $16,000 per person, then you do have to file the report. And one of the myths is, people think that it will be a taxable event. Well, it's not on a current basis, either to the recipient or to the person who was giving the gift. Because anything above that $16,000 or $32,000 level, you're basically using up your estate tax exemption. And until you use it all up, there are no taxes on a current basis. So let's go into that tax exemption. What are the limits now for federal estate death taxes? So for 2021, the federal estate death tax is $11.7 million. And if you were to have the proper estate strategies, if you were married, each of you could grab that 11.7, or you'd have somewhere around $23.5 million of a threshold, assuming you've done the planning properly, of a estate death exemption. For this year, upcoming 2022, that $11.7 million has been moved to $12,060,000. So again, that's per each individual. Proper estate planning will allow you to take 12.06, if you will, times 2. Now, I do want to share with you that, so if you will, bonus strategy. And it deals with 529 plans. And if you are hoping to gift a substantial amount towards your grandkids' higher education. So let's talk for a moment about what 529 plans are. They're the ability to put money away into a tax-deferred vehicle. And if that money is used for qualified expenses, it's not just college anymore, they're higher educational expenses, that definition's been broadened. But if that money is then used for higher educational purposes, it comes out tax-free. Now, here's the interesting part of it is, let's assume you've put too much money in, or the money grew too much and the child did not use it all. What happens with that money? You could, as the owner of that account, you could assign a beneficial interest to another child or family member. Or here's the interesting strategy. If in essence you've overfunded and there's too much money and you are the owner, first you have taken money out of your estate and lowered the amount in your estate for putting money into the 529 plan as a gift. However, if you wish to take that money back, or there's more money in there than is going to be used and you wish to grab it back, then you can do so, and the only penalty is 10% on whatever the growth was. So it's a wonderful opportunity to use a little bit of a loophole, if you will, to get some money out of your estate for the purpose of, let's call it, the grandkids' education. And if at some point down the road you have a need to or wish to take it back out, you can. I strongly suggest that you consult with your financial advisor, estate planning attorney, to find out which strategies are best for you.